Hello, this is Paul with OUTPACEsys, and this is your report for the week ending on the 23rd of May 2008. As usual, we will be quickly reporting on the financial status of the US markets as well as the international markets. We will also report on the trades that are underway or that we have recently closed, and that is a trade that we closed at a profit of 41% in 1 week. And we will tell you what our indicators are pointing to for the next several days. Well, as I'm sure you know, this week the US equities took somewhat of a dive. This is the weekly performance of the Nasdaq, the Dow Jones Industrial and the S&P 500, which all closed down at about 3.5–4%. Let's take a moment to take a look at the longer term performance and see where we are so far this year. This is the comparative performance of the same three indices on a month point of view, so this is all of May. In May, both Dow and the S&P gave negative results so far. The Nasdaq is up 2%. On a 3 month view, we can see that the Nasdaq has actually grown up 12% on these 3 months, whereas the S&P and the Dow have just gone up a couple of percents. In these last few months, the Nasdaq has made a nice recovery, compensating the minus 20% drop it incurred in the first 3 months of the year. Now all three indices are down about 5% for the year. Now, while the US equities are sputting around trying to recover this loss so far this year, look at what other commodities are doing. This is a year-to-date comparative performance of the S&P 500, government bonds, gold, and oil. S&P 500 is in yellow and shows the minus 5% that we discussed. The government bonds have been trading in a range for at least about 6 months. Gold, on the other hand, is up 10% this year, and oil is up 40%. Gold had dipped in the first quarter of this year, down to -% overall, but has practically recovered it all now. This month's view shows that gold is up 5% this month alone. Oil this month is up 15% and grew 5% this week alone. So crude oil is going up. It's taking no prisoners. We are enjoying a nice profit because we had a signal to go long several months ago and we are still in that trade. We're not recommending to initiate any new long positions at this time. This is the 1 week comparative performance chart for 9 sector ETFs that we follow. Practically all are going down this week. We'll see what happens next week. On a year-to-date performance, only 2 of these funds are positive. Not surprisingly, the energy and the materials sectors are the ones that are positive so far this year. Let's look now at what happens overseas. These are 6 of the single country funds that we follow to get a picture of what happens pretty much around the world. It's not much of a consolation, but all these funds are in the negative for this week. The monthly performance is not outstanding. Over 3 months, the best performer has been Australia, followed by Germany. But on the yearly view, Japan and Taiwan are the best performing, while the other funds are all pretty much in the negative. This is a chart of the 5 best and 5 worst performing ETFs, including all categories. It's a bit depressing, but the 5 best performance funds are the ultra short. The 5 worst concentrate on home builders and financial sectors. Let us look now at our portfolio and the trades that we had this week. We closed on Friday a short position that we had on the Qs. The position was opened last week and greatly benefited from the drop that we saw this week. We closed it at a 41% profit. This is what the trade looked like. As it is shown, we bought at 227 last week, and after a small decline, the trade recovered swiftly and we closed it on Friday at 320, since we are not sure that the downtrend is still continuing next week. So this is it for this week. Thank you very much for listening to us. Come and visit us at OUTPACEsys.com to learn more about our trading methodologies. Happy trading. See you next week.